So let's begin SA 550, related parties. Many students have misunderstanding on the standard. They are thinking the auditor's responsibility for 550 is to verify whether related party transactions are properly accounted and disclosed. They are thinking it's an accounting standard requirement. No, it's much more bigger. And to best of my knowledge, from these points only in exam they'll ask, if at all they ask 550. They will not go and test much in depth. So you see 550, what they covered is they spoke about scope, objective, what is the requirement. So what auditor has to do under 550? What if auditor has identified any related party relationships and transactions newly that are not identified by the entity previously? And if at all any related party transactions are happened outside the normal course of business, what auditor has to do? And getting representation and documentation. This is what the standard mainly deals with. Entire overview of the standard they have given clearly, neatly they are presented. Maybe if at all I told you 5 reverse EA intro also, you may not refer, you can ignore that, not an issue. You can just stick to this. This is enough. Now you see scope, ignore that. Look at the objective. Look at the objective. The objective of related party relationship is, the objective of related parties under 550 is identify fraud risk factors. Identify fraud risk factors arising from such transactions. See, you need not highlight. It's already neat. Why again highlighting? I'm just highlighting because whatever I'm reading, it should be visible to you, right? I am highlighting for that reason. Are you thinking I'm highlighting because it's important? No. You see, every line I'll highlight. You should understand. I'm see, so that you can be more connected. If I'm highlighting like this and reading will be connected to me. For that reason I'm highlighting. Some students highlight in such a way, whether they read highlighted portion or unhighlighted portion, I don't know. Highlight pannuva. Have you observed? One student notes I saw, like I got a mini heart attack. On the book letters, number of letters, and the number of letters he wrote more than the book content. Full observations. Some students know they write running notes in such a way, even if I cough also they'll write. Heights of stupidity. Because no, olden days I'll tell you. In olden days, no, all my faculties, see, I have a respect on them because they're a teacher to me. But I'm not having respect on their stupid thoughts. If it is thought is stupid, obviously it's a stupid thought. Write everything they'll tell. Because they don't have anything to tell. So they dictate notes in the class. Full content what dictate in notes? Full content, full speed discuss pandradha, it will be like almost 130 hours my audit class. Only discussion, no notes dictating and all. If I start dictating notes, it will be 400 hours. Obviously, because I need to cover 100%. Na? Some are so clever. They dictate notes and finish audit within 70 hours. So imagine what they are dictating, what they are covering, coverage. So they don't cover. Previously, when we were studying CA Foundation, they used to say running notes you have to maintain. Every word you would. There the students know, all of them like missions they'll be writing, whatever they say. They don't understand. They'll ask me doubt. I will tell them this is what like this. Because I focus on listening. I don't focus on writing notes. It's already there, na? Material is given. Why? Because it's there already. Why are you writing? Maybe you can write some examples which I use. That okay. That too when you should write, preferably speaking, you have to be very focused and listen attentively. Immediately, I'll give 2 minutes gap. Na? Instead of chit chatting, you should write. That is why, yes or no? 2 minutes is that is for my relaxation and that is for your notes taking. That's a time gap. You will not do that. Quality of listening will affect badly if you write notes simultaneously. I'm telling you, you just don't write notes, just focus on listening. And then you read once again, you see the level of clarity that you have. And the same you check with another concept while simultaneously writing notes. You focus half on writing the notes, half on listening the class. You don't process my information. Why you're listening is to process. So this, now observe this. So, the objective of the auditor is to obtain An understanding of related party transactions. 2, fraud risk factors. If you see fraud risk factors in that opportunities, one of the opportunity for committing fraudulent financial reporting, fraud risk factor is engaging in complex transactions with related party relationships and transactions. So through related parties, there is a high risk, high fraud risk factor is possible because an entity can manipulate its performance and position by related party transactions. Startups especially, they get huge valuation by related party transactions. Getting it? They sell goods to so and so entity, related party. Getting it? And they show higher profits and they get higher valuation. All this Byju's, everything, they do these kinds of manipulations only. They go very aggressively. In business, I'll tell you one principle: do organically. Never promote. Promotion you can do, like students' feedbacks, this and all you can promote. Getting it? But paid promotion, if you go in business, where the promotion cost is, if it is more than 5 to 10% of your total business cost, your business continuity becomes very challenging in long run. Maybe in the initial 2-3 years, it can be there, if at all. Initial few years, or for expansion purpose, you can take, but you cannot spend more than 100 rupees than you are getting. All these entities did what? They did the same. So the moment they see 1 crore turnover, they spend 10 crores for marketing. And they're expecting 100 crores. And that next year turnover is 5 crores. And the third year, they're insolvent. This is what happened in most of the cases. We work, Byju's, Unacademy. Unacademy also, you see, they're struggling like anything. Yes or no? Because the moment they get little name and fame, they go for aggressive marketing, aggressive campaigning. That will not work. In education, what works is organic reach. Getting it? If there is an organic reach, and adding to that, you're active on social media. That is also important. Organically, if it comes now, it will be very good. Physics, you see, they do organically. Almost in the initial entire, until they establish like a very big player, they did organic business. Thereafter, maybe for extra expansion and all, they went for marketing. Immediately they again stopped. They realized within shortest time that paid marketing will not work. Getting it? Unacademy and all, they realized after burning everything. Getting it? So that's the difference. Any business for the matter today, Instagram is there. You use wisely. You see how many products we are buying just by watching reels. Indirectly, that itself is an indication that if you want to sell something, you have to make a reel. You have to make a reel, how to use it, how to, what is the advantages. Creatively, you should explain. Even if you don't have money, he will use credit card. That's how you should be. Getting it? Fine. And remember, only quality sustains in long run. Only if your product after using is satisfied, then only it will sustain. Otherwise, everybody will buy will see the reel. One time they'll buy and leave. Second time they'll not buy. They'll not even refer others also. So, anyhow, so fraud risk factors. So that is one important thing when you are observing related parties. Then conclude, if you identify any fraud risk factor, conclude whether financial statements are affected by such transactions where fraud risk factors are there. And see whether financials are achieving true and fair presentation and are not misleading to the extent of related party transactions, and obtain sufficient appropriate evidence whether related party transactions are properly identified, properly accounted, properly disclosed in the financial statements. So whether related party transactions are accounted and disclosed is secondary objective in the standard. That is not the primary objective. The primary objective in the standard is recognize fraud risk factors based on the related party transactions and relationships. Related party relationships and transactions. That is the actual word they use. Now you see. So what the standard says, what is the requirement of the standard, what they are asking you to do. You have to do risk assessment procedure related activities to related party relationships and transactions. What transactions, company, like who are the related parties, holding companies how many, subsidiary companies how many, associates how many, key managerial persons are how many, their relatives are what are the transactions that the company did with them, what is the business rationale, what is the necessity. Are you getting the point? And look at the prices at which the transactions are happening. Are they at the similar prices that we do with unrelated party? If not, why there is a price difference? You need to do all that risk assessment. First, in risk assessment, we focus on whether company has a formal identification mechanism for related parties. So that we focus on. Understand entities, related party relationships and transactions. That's what I told. Maintain alertness for related party information when you are checking records and documents. When you're vouching, when you're inspecting, be alert. You may find any related party. You will find related parties by looking at investment register, by looking at share capital breakup. Getting the point? By looking at large loans and advances, by looking at significant suppliers and significant customers. So these are all people might come under related parties. Customers and suppliers, they are treated as related parties under income tax. In 92 transfer pricing, they are treated as associated enterprise, because if a significant supplier can influence you, a major supplier can influence you, a major customer can influence you, under accounting standard it is not. And by the way, for this standard, there is a definition for related party. So the definition of related party, it says, who is a related party? A related party is a party defined as per applicable framework. That is the main definition. Suppose if the applicable financial reporting framework does not contain related party related requirement, of course, in India or anywhere else in the world, most of the countries, whatever standards they follow, they have a specific requirement on related party. So applicable financial reporting framework is specifically spelling out about related parties. There is no framework that is silent on related parties. If at all framework is silent on related parties, or the framework contains only a minimal discussion on related party, then who is a related party? Auditing standard defines. Who is a related party? Follow the same definition given under accounting standard. That's what auditing standard says. If at all accounting standard is silent on related party, then auditing standard definition. Inside that, the one you are controlling, the one controlling you, the one along with you controlled by others. That is what common control. Nothing but the companies, the entities that you are controlling or significantly influencing, other entities that are controlling or significantly influencing the reporting entity, another entity which is along with reporting entity controlled by another entity. Getting the point? Nothing but sister concerns. These are all related parties. Now there is an exception below given. Remember, entities that are under common control of a state, they are not treated as related parties unless they engage in significant share of transactions. Getting it? What does it mean? Suppose central government is having ownership in 600 plus central public sector enterprises. IOCL, PPCL, HPCL, PDL, PHEL, BSNL, NL is something. Telecom Sanchar Nigam Limited, TSNL. Getting it? So many central government public owned companies were there. Now all these central government public companies are commonly controlled by central government. Can I say all of them are related parties to each other? That's what. So that's the exception. That's asked as a true or false statement in MCQ. So entities that are under common control by a state. State means dictionary meaning country or state government or local authority. Getting the point? State refers to government. Entities that are under common control of a government, just because they are under common control of a government, they are not treated as related party. Related party definition we generally apply for normal companies. We don't apply for government owned entities. Suppose IOCL has a subsidiary company. They both are related parties. IOCL and BPCL are owned by government of India. They both cannot be treated as related parties to each other unless they engage in transactions. Clear? That's what the definition of related party, which is not given here. Okay. Next. No. So requirements. So you check documents, records, be alert. Whatever related party information you obtain, share it with the engagement team and identify and assess risk of MMS that is associated with the transactions and relationships with related parties. And if you identify and assess any risk, response to the risk of MMS, getting it, you will respond by performing further audit procedure. For example, if you identify significant related party transactions outside normal course of business. What do you mean by normal course of business? Suppose I sell goods on credit generally for 60 days. That's my normal course of business. That's my general sales terms and conditions. But to one of my related party, I gave 300 days credit period. That's outside normal course of business. Generally what I do, That's ordinary course of business. Outside ordinary course of business means occasionally, unusually, exceptionally what I do. Getting it? If you identify any related party transaction outside normal business terms and conditions, what auditor has to do? Inspect the contract. Check what is the necessity for the transaction. Why are you giving 300 days credit? What is the rationale? Getting it? Whether terms of the transactions are consistent with the management explanation. You asked them, right? What is the rationale? They gave explanation. Look at the agreement. Are they consistent? Whether such transactions are properly accounted. By the way, this is an outside normal course of transaction. Okay, let it be whatever it is. Is it accounted in the right manner? Check out. And get an evidence that these transactions are properly authorized and approved. Section 177 Audit Committee has to approve all the related party transactions. And related party transactions 188 section is also there. And in CARO also we need to report whether the related party transactions are in compliance with 177 and 188. Whether the accounting standard requirement for disclosure is satisfied or not, we should report in CARO also. Next. Suppose you did all this requirements, you are trying to identify risk assessment, you did risk assessment, you performed further audit procedure, you obtained information from the management, you got a representation also. The auditor shall obtain written representation. All the related party transactions have been disclosed to the auditor. All the transactions have been properly accounted and disclosed in the financials. And auditor shall communicate during the audit in connection with related parties. Whatever observations you found in related parties, you have to communicate and document whatever you have communicated with management, whatever unusual things that you have identified, what response you did, getting it, what further audit procedure you did, all that. Suppose if you identify any related party transactions which are unidentified by the management, undisclosed by the management, you newly identified transactions, you identified some new transactions, new related party relationships, which is not in the list given to you. What auditor has to do? Ask management why they failed to give this. Getting it? Once again, see whether management is following a proper risk assessment related to related parties, whether they are maintaining a proper register, all that. Auditor shall determine whether underlying circumstances confirm existence of such transactions. Communicate within the team that you identified a new parties. Management, once again ask management, why are they failed to give? Once again tell them, identify all the transactions with the newly identified related parties. Perform more substantive procedures, means go in depth. Why they failed to identify? What could be the reason? Is that reason correct or not? You evaluate and reconsider the risk with respect to related parties. All these days you thought you have a knowledge of related parties properly, but you now got to know extra related party. Like this, how many were missing? Reconsider the risk assessment once again. If at all you think non-disclosure by the related party information appears intentional, evaluate the implications. If at all you feel intentional, 240 we have seen. If at all you identified any fraud, or if at all you identified anything that is intentionally suppressed by the management, you try to do further audit procedure, discuss with next level management, all that. If at all you felt that there is a limitation on the scope, withdraw from the engagement, communicate with appropriate legal authorities, communicate with top management, and then withdraw. If withdrawal is not permitted, give a disclaimer of opinion. If you end up with a conclusion that you are unable to give opinion, that's it. Over 550. Easy or not?